Hey guys, Joel Frank here, market analyst for YouTrading. In today's video, we're going to take a quick look across markets and then we're going to chat about what to expect in the week ahead. So let's jump straight into it. And the first thing I want to talk about today is currency markets because there's been a few interesting developments. Let's start here with dollar yen. You can see that I've got it on 1 day candlesticks here. We've got some big candlesticks at the moment. Why is that? Well, we've been seeing, well, we're not 100% certain because they haven't confirmed it, but we've probably been seeing some quite significant intervention from the Bank of Japan at the direction of the Japanese Ministry of Finance. They've been basically seemingly directing the Bank of Japan to buy the yen, pretty much selling dollars, buying yen, selling other assets in favor of the yen as well, but probably mostly dollars. So we've seen all this choppiness. Remember, guys, I was talking about how I was expecting some yen, some intervention because we did have this 11-day streak of moving higher, moving higher, moving higher. Then we broke above 150. Even actually last week, nearly hit 152. So this cross is kind of all over the place at the moment. And do you remember, guys, I also marked up this support area that I was quite liking and thinking, if we get back to the 21-day moving average, this support area, we could bounce, which seemingly for now is what's happened. Um, we kind of got this uptrend going as well, which we seem to be respecting fairly nicely for now. So why is Japanese intervention not reversing the tide? Why are we not seeing a big move lower? Well, the fundamentals very much point towards dollar yen continuing to move higher. You would think for now, because you've still got an aggressively hawkish Fed, you've still got a US economy which is, I mean, we'll talk about the data that we just had in a second, but still seemingly doing okay. Um, so, as long as US bond yields remain moving in an upwards trajectory, they have pulled back a little bit in the last couple of days, but they're still high and close to historic highs. Then, the outlook for a sustained dollar yen turnaround isn't too great. Let's just talk about that data though that we had. We had flash PMIs out of a bunch of Eurozone, well, the Eurozone, UK and US, and look at these US numbers, pretty ugly. Uh, but the thing is, this is market, IHS markets PMI numbers, and they've been pretty weak for some time. But ISM, the Institute of Supply Management, an alternative company which compiles these PMI data out of the US, they have indicated strength in the US economy in the last couple of months, fading but still strong. And the ISM numbers are the ones that are more closely followed. So for now, it seems these market PMI numbers in the US aren't turning the tide for the dollar. Like, let me just show you the Dixie. We're a little bit off recent highs, but still hanging around in this 112 region. Um, so yeah, I mean, and when you look at these Eurozone and UK numbers, you can kind of see why we're not getting a sustained pullback in the Dixie. Because look, the UK numbers even worse, like manufacturing and services. Well, actually, UK services a little bit higher, but just weak, basically weak. And then look at these German numbers. Look at that German manufacturing PMI, 45.7, and then the services PMI, 44.9. Ugly. Um, so what else we've got going on in currency markets? You've also got quite a bit of action in the yuan, or this is the offshore yuan anyway, China's currency. Um, Basically, we've had President Xi Jinping secure an unprecedented third term, the first Chinese president to do so. And there are some concerns about his new cabinet, basically his new government, about whether they're going to whether they're basically going to pursue ideological sort of communist um, goals as opposed to continued strengthening of of China's free market, which is what actually gave them all the prosperity in the last generation. And also with Xi Jinping now even more powerful and likely to continue with the zero COVID policies, that's another concern as well, because that's been stifling Chinese growth. Although latest Chinese GDP numbers were actually a little bit stronger than expected, 3.9% year over year growth, pace of growth in the most recent quarter. So that wasn't too bad. But then the retail sales figures, the latest monthly retail sales figures that we got were weaker than expected. So it's a bit mixed on the China data front. And then the political situation weighing on the yuan. Just an interesting one there. Quickly, we can look at euro dollar. Remember, guys, I've been talking about this pennant that euro dollar was in. Looks like we might have broken it now to the upside, which is interesting. We're going to have to keep an eye on that, whether we can get above this 50-day moving average. That could see us move towards parity once again. And one of the things to talk about is going back to US fundamentals. Last Friday, we had a report, I think it was in the Wall Street Journal, talking about how the Fed is probably going to discuss slowing the pace of interest rate hikes after its next 75 basis point rate hike in November. They could drop the pace to 50 basis points or, something like that. Which seemed to boost market sentiment at the time. So let me just show you the S&P 500. We had this nice 2.5% rally last Friday, pretty much on that. Means that we've stayed sustainably above the 21-day moving average. We're coming off a little bit this morning after testing an area of resistance. But we could push higher this week. Why could we push higher? We've got a lot of big earnings. We've got Apple, Amazon, Google, another big one that I'm missing out. Got it on my notes here. Microsoft, yes. That's all to come this week. And the earnings season so far has been pretty good. It's been one of the other reasons why we've been able to bounce from these recent lows. So yeah, just if there's a slight fading of Fed tightening fears this week, if there's good earnings, there's always a chance we could break above this and maybe test that 50-day moving average, maybe test 3,900 even. But we're going to have to wait and see. In terms of the other big events we got this week, US data, it's GDP later this week, but GDP's backwards looking. So it's never, for me, it's never the most important one. More interesting for me probably is this core PCE price index data on Friday, which is the Fed's favored measure of inflation. Now, obviously, the inflation data recently has shown that core inflation in the US remains hot, hot, hot. So this will be closely watched and could affect sentiment. Outside of the US, outside of the inflation and GDP data, it's actually quite a big week. Let's go through it. We've had the PMIs today. Tomorrow, we've got, tomorrow's not a particularly big day, smattering of tier 2 reports like German IFO. Then we've got some Fed speak. Wednesday's overnight session, Aussie CPI, that's always a big one. Bank of Canada on Wednesday, they're going to do a 75 basis point rate hike probably. ECB on Thursday, again 75 basis point rate hike probably. BoJ, they're on Friday's overnight session. They should pretty much remain ultra dovish, but in this environment of yen intervention should be interesting. And then, a smattering of other reports as well, like Canadian GDP and anything else worth mentioning? No, that's it probably. But yeah, it should be an interesting week, guys. Hope you all enjoyed the video, and I will see you all in the next one.